Hello, and welcome to MorphMinutes, presented by StudioM Financial. StudioM Financial exists to help you change the sound of your money through financial education and coaching. I'm your host, Katrena Pitts, instructor and financial coach. Hey everybody, it's Katrena again from StudioM Financial with another edition of MorphMinutes, our podcast that we do here for you all to talk about business things, personal finance topics. And we're going to be talking about tax preparation, and that's not to be a downer. It's really to help us feel ready for tax season that's coming up. January through April is our typical tax season. But what I don't want to do is wait until the last minute to have us be prepared. And personally, I'm doing the exact same thing with my own business finances and personal finances, making sure that I have all my documentation. I know where certain statements will be coming from. And so I want to do the exact same thing with you all today. So again, this is Katrena. So thank you all for joining and listening today. And hopefully this is helpful to really just sort of bring down the temperature on tax preparation. And I understand that people want to pay as little in taxes as possible. Totally get that. However, we do need to be prepared and have the right information in order for us to have a solid and accurate tax return. So the purpose of today's podcast, as I just said, was to talk about the 2025 tax season that's going to be starting here as we do our taxes here in a few months. What are some common documents that we are looking for, standard deductions that are on the horizon that will be applied to this tax season, and tax returns? That's the word I'm looking for. I'm not really sure why that was so hard. And then itemization as well. So some things have changed from a congressional perspective. So just want to make sure that we are aware of those things as well. So first, let's start with necessary and common documents. Now, if you are not a business owner, you are a standard W-2 employee or a 1099 employee, then this is going to be pretty straightforward for you. So we're accustomed to the W-2s, right? Those are provided by your employer. They will come out around the end of January in either digital format or paper format, depending upon what your election is with your particular employer. So if they send out emails, they probably should be sending those out somewhere around now of, hey, what is your election of preference for your tax documents to be sent to you, whether that's email or whether that's in paper. So we know those will be due by the end of January, like I said, and then those include your wages, the taxes that are withheld, and benefits that you have contributed to a 401k or any sort of health benefits that you have received. You have an HSA or an FSA. All that information will be included on that W-2 form. And now with the 1099s, those are a little bit different because you're an independent contractor, right? So there's no taxes that are taken out. That is up to you as the individual to make sure that you are accounting for that. So you should receive a 1099 form that just has straight what you were paid for the project that you did, the job that you completed. There's no, hours calculation of that. It's just the straight gross amount. So then the taxes will have to be deducted and assessed from that. So our standard one's W-2 forms and then 1099 forms. And 1099 NEC for freelancers and contractors. And if you have multiple jobs for that, then it might be a good tip and a good suggestion to go back in your calendar maybe to see when you did certain jobs. So you'll know, I was a contractor did work for company XYZ. I did, contract work for company ABC. I did contract for company, 1, 2, 3 over here. If there's multiple ones and your job is freelance work, that you would have some sort of tracking system for that, especially if you're new to it. If you're an old hat at it, then you probably have a system or something that you use to help you keep track of that. But if you're a new contractor and new to the freelancing world, then definitely start building a system to keep track of not just who, but what, right? What you did, how much you were paid, so that what you document, what actual funds hit your bank account, match what is on their tax document, because they're also reporting that information to the IRS. So you want to make sure that you have the correct documentation, that it's accurate, that's accurate between you and the organization that you did the contract work for. So 1099, NEC. And then let's move to, those are the employment documentation. So you're either W-2 or 1099. Those are really the main options that you have for that. So then what about investment documents? So let's say that you have a a 401k that you withdrew funds from, or you have a savings account that you withdrew funds from. We'll get to that here in a second. Or you sold some stocks that you had in the stock market or in a mutual fund or something of that nature, but anything that was securities related. So a stock that you did on the stock exchange. That 1099B, so for stock sales, I'm reading the paper here, so I want to make sure that I get the information correctly. Going off the top of my head is not a good idea for either of us, so just a little cheat sheet here for me. But 1099 for stock sales, so capital gains and losses. So capital gains is money that you have made off of that investment that you are now being taxed on. Losses, or if you sold that investment and you sold it at a loss, what's the total? So meaning you purchased it for $5 and then you were able to sell it off for $15, the capital gains on that difference between the $5 and the $15, or you bought it for $5 and you sold it for $2.50, the negative that you lost on that, so the negative 250. So capital gains and losses. So you're gonna have a 1099B form for that, but also if you received dividends from any of your securities investments that they paid you, so that was monthly, quarterly, or biannually, or maybe once a year annually. But typically, it's like a quarterly or a biannual basis, meaning every 3 months or every 6 months. You get paid dividends, and you can see that tracking if you track your investments. $100 here or $10,000 or whatever the amount of the dividend was based upon what you had invested in that particular organization. You can see that. And so matching up, there'll be a final tally of what that dividend, the amount of the dividends that you received from that. So make sure that information is correct and that you are not accounting for, but tracking those as well, especially if you have multiple investments that you are having to keep track of, that you need to report on as income. So 1099 DIZ for dividends, and then 1099 INT for interest from brokerage accounts. So if you have a brokerage account that accrues interest on it that you need to report, you will have a separate statement for that as well. So 3 things, or even crypto transactions as well. So 1099. So stock sales, crypto as a separate alternative investment, and then dividends that you need to report, and any interest from brokerage accounts that you need to report as well. So that's investment documents. Savings documents, and I alluded to this a second ago on the 1099 part. So you will also receive a 1099 form for interest from a savings account. So 1099 INT, similar to the one for brokerage accounts, there's one for savings accounts. So if you have a high yield savings account that's accruing money, you will receive a interest statement from the bank to let you know the actual total amount for the year, the total interest amount that you accrued, that account accrued for the year. So keeping that handy, and then on any sort of CDs or bonds that you also have. So making sure that you have a good record of where your investments lie, where your income lies as well, because it's reportable, and you should report it. I get it. Again, as I said, people are trying to find ways to pay the least amount of taxes, but be accurate and be honest and be forthright in what you are reporting to the IRS. Best way to avoid an audit, just to be honest. So then we have income coming in, but then we also, the other income, let me do this one as well. So gambling winnings documents. So I added this one kind of for obvious reasons. One, people gamble, and they gamble even before the proliferation of all of the gambling apps that we have on our phones, that we don't have to actually go to Las Vegas or Atlantic City or any of those places, or Choctaw, just in Oklahoma. But with the proliferation of gambling applications that you can get on your phone, it made sense to include this one as well. Now you can say, Katrena, you're 10 years behind it or 5 years behind it. That may be true, but including it, and as a point of it is income that you have received over and above, or in addition to other income that you have received, making sure that you report that as well. So gambling winnings. So you will receive a W-2G form from the gambling establishment, from the casino establishment. So whether that's some of the casinos in Vegas or Choctaw or Atlantic City, whatever, it will send you a statement of your winnings and your losses. Now, if you have an app form, I don't know exactly where it is in the app because I don't use them personally, but I would be willing to guess, I almost said willing to wager, willing to guess that there is a place in your profile, whether that's in the settings or whether that's in your profile, winnings or some place that you can locate, or it may just be on the dashboard. Once you open up your app, it tells you, what the running total is of your winnings. But being able to pull a statement directly from that application, I would start searching around if you don't know exactly where that is, especially if you started using these in 2025 and weren't really thinking about the tax implications of it. I would start digging around in the application now to see if I can find it, or if there's any, or see if you can find it, if there's any help information that you can find through the provider or the software company to be able to locate where that statement is. But you should be able to pull your winnings for the annual year of 2025, January to December. So gambling at forms for winnings over $600, and then tracking the losses because you can deduct up to the winnings if you itemize. Now we'll get to itemization here in a little bit, but your gambling winnings, and then loan interest documents. So far we've had employment documents, we've had investment documents, savings documents, gambling winning documents, and now let's talk about loan interest documents. So loan interest for your home or for your vehicle. You'll get a 1098 interest form. And this is really helpful if you actually do itemize your taxes versus using the standard deduction. We'll talk about it here in a second. But you get a tiny 1098 mortgage interest form, and it could, whatever the interest that you paid, $10,000, $5,000, $200, whatever. The amount that you would be on that, probably not $200, but whatever the amount of interest that you have paid in that calendar year, if you have a loan on the home. If your home is paid off, you're not going to have an interest statement because there's no loan to go with it, so you're not paying any interest. So if you finance your home at any point and your home is still under the terms of that loan, whether it's refinancing or the original loan that you had it under, an interest statement will be coming to you as well. And again, it's helpful if you are itemizing your taxes. If you're not, if you take the standard deduction, then you can just sort of set it to the side, but keep it with you just in case. Because if you're looking for which is better, the standard deduction or the itemization, you want to be able to have all the information with you, and that interest form is going to be helpful. Now for car loans, and this is the note that I make, so I want to make sure I get it correct, is that there was an addition to the tax law or legislation related to car loan interest that you can deduct in your tax return. And it was one of the bills that was passed, a big, beautiful bill that was passed by Congress in the fall of 2025. And it is specific to new vehicles. So new vehicles that you purchase, not as in a 2025 vehicle that rolled off the lot. You purchased it new, not used, but it's new. And it was assembled in the United States. And there are some modified adjusted gross income parameters and kind of boundaries of where things would phase out as to how much interest that you can deduct from it. But it was purchased between 2025 all the way through into the future of 2028. So we have a 4-year window, 2025, 26, 27, and 28. So a 4-year window for this to apply until Congress has to re-up it again or continue the parameters, much like the tax bill that they did to instead of instead of ending, I'll put it that way, instead of ending the tax brackets and pulling those to a close, they re-upped those earlier in 2025. Now, so a similar thing here. They'll go back through this whole round of negotiations again with the Congress that's instituted or constituted in 2028, and then figure that out then. But for now, 25 through 2028. So new vehicles assembled in the United States, and then there's a modified adjusted gross income restrictions, and it will be up to $10,000 in interest. So keep your eye on that, not especially, but if you purchased a new car in 2025. Let's move on to student loan documents. So this will also cover Form 1098E for interest paid up to $2,500 deduction above the line. So there's above the line deductions and below the line deductions. I'm not going to bore you with those at the moment, but there are ways that they are organized of what's above and what's below. And so $2,500 deduction above the line. So advise gathering statements now your service provider. So whether that's Navient or federal aid. I forget what the name of it is. I should have written it down. But whoever is servicing your student loan package, if you will, finding information from there. They should send it to you or at least give you electronic access to it, but also knowing where you can find it within the platform and the portal as well in your account. So student loan documents as well. And then the last one I want to talk about is the charitable giving document. So receipts or any sort of acknowledgement that you have donated money to a nonprofit, to a church, to a charity, to any sort of philanthropic, Red Cross or a nonprofit that does literacy or a food bank, or you donated clothes or whatever, and they gave you the valuation of that $15, $20, $5, whatever, with their EIN numbers on or their tax ID numbers on it, and gave it back to you. Wherever those organizations that you were very well familiar with, just like I am. So those statements and acknowledgments from qualified organizations for cash or non-cash donations. So keeping those as well. Again, itemized. If you itemize your taxes, that's a statement that you will need that you can categorize each and every one of those expenses and deductions that you need to have in lieu of doing the standard deductions. So cross-checking against prior years as well, kind of a tip. So if your taxes, much like my taxes, are pretty standard from year to year, you give to the same places, you've had the same employer for a long period of time, or you've been doing freelance work for the same organizations for a long period of time, so you have a good, clear picture of what those statements should be. Just looking back from year to year, just to see, did I do anything special? Did I do anything different that I need to, oh yeah, I forgot I gave to XYZ company back in April. So I need to make sure I have documentation for that if that's of interest to you. Sometimes it's not for people. They give and they're generous with it and they don't keep track of those things because it's not of that importance to them. And that's fine too. But if you do and you track those things for tax purposes, absolutely keep your running log of it. And just like I said, go back to the last couple of years, especially if you have that, which hopefully you do have it at the ready, to be able to look back and see if there are any places that you forgot or that you need to make sure that you account for. So those are the common documents. So employment, investment documents, savings, charitable giving, gambling, loan, interest, student loans, and then, kind of the looking back. Now, if you have business documents and you're on the business side of it, then you are responsible for making sure that you provide the correct tax documents to your employees and the people who did freelance work for you. So make sure that you send out your W-2s by the end of January. Make sure that you send your 1099s to those people who did contract work for you by the end of January as well. So be sure that you're working with your HR department and your accounting or your accountant, CPA, whoever it is that does your tax work for you, that information is pulled out from the software that you use, whatever the bookkeeping platform and software that you use. Be sure that information is extracted out and timely sent to people that you need to send it to. Or if you were on the nonprofit side of it and you need to send some statements out, especially if you are a church administrator and you want to make sure that you send the charitable giving out to the people who gave to your church congregation or third-party sources, whomever, making sure that you provide the correct documentation to them as well. So it will be these number of documents, W-2s, 1099s, charitable giving forms. It will be those people, or those forms, but you are on the sending side of it, maybe in addition to the receiving side of it. So just be sure that you are organized for that, and give yourself time, right? Because you do have a time frame to have this by the end of January. So give yourself time to start now, making sure you're closing out the books. Again, by the time this podcast launches, it will be early January. But that those days you're probably doing those things around that time. So making sure that you have those documents ready and prepped, and you have maybe a checklist for yourself as well. And we'll get to that here in a second. So that's a necessary document. So what about standard deductions? Standard deductions is really a flat amount that adjusts every single year, that is deducted from your gross income to lower the tax liability that you have on your tax return. So you made $50,000. I'm making up numbers here because this is not the actual number, but for example's sake. So $50,000. So instead of paying the full, whatever your marginal tax rate is for that $50,000, standard deduction would be, we're going to deduct a standard amount for everybody that falls into these particular categories. And we're going to deduct, again, I'm making this number, $15,000 just right off the top. So instead of a $50,000 amount that you would have taxes on, you take that $15,000 and you now have $35,000 that you would be assessing taxes on after you do all the different deductions and expenses and such to really get to your actual tax bill. So right off the top. So it really is a way to reduce your tax liability depending and based on the filing status. So are you filing as single, head of household, married filing jointly, married filing separately? Are you over the age of 65? Are you blind? There's different things that, as if you do your own taxes, you kind of have these boxes to check. But if somebody is just doing your tax return for you, they'll probably ask you these different questions. What's your age? They can look at your driver's license, right? And when they put the date in, if it's before whatever 65 years, so 1960. If your age is above that, right, then it will tabulate whatever your tax, or excuse me, your standard deduction would be. So single, married filing separately, 15,750. Married filing jointly, or a qualifying surviving spouse, meaning you had a spouse that passed in that tax year. So 31,500 if you're head of household, which has its own kind of decision tree, if you will. 23,625, and then an additional for age 65 plus or blind, extra amounts up to $6,000 more per person under the recent legislation as well. So there's numbers to work with and to anticipate. So if you're single, never married individual, and you go through sort of the questionnaire, which is why they're asking you. I'll put it that way. So if you ever sort of click through, if you do your own taxes, you ever sort of click through why are they asking these questions, it's because they're trying to figure out what the standard deduction needs to be assessed to your tax return. So never been married, no dependents, none of these things, single. Okay, then your standard deduction is going to, and you're under the age of 65 and you are not blind, then your standard deduction is going to be X amount of dollars. Or married filing jointly, you and your spouse put it in, and you are both over the age of 65, so you have your married filing jointly in addition to your standard deduction amount for being over the age of 65. So that's why they're doing it, trying to assess what the amount is. Now, the alternative is, instead of doing the standard deduction, is if you want to do itemized expenses. Now, the standard deduction piece, why it can be beneficial is it's ideal for people who have a short list of expenses, a short list of income, meaning we don't have income spread among many things where we're having to buy materials for a lot of things, we're having to buy resources, all different things. We have a lot of business expenses, those kind of things. Itemization is really, really the better way to go. It's just the number off the top, and we kind of keep it moving, and we put in our few things about the 401k or the IRA that we have, and maybe the savings account, and we just kind of move on with our day. So we're renting, so there's no mortgage interest that we're having to account for. Not in school, so there's not in school, and there's no student loan that we're having to account for, so that goes by the wayside. All these other different statements that I just listed, your list is really, really short, which is perfectly fine. Standard deduction is probably a simpler way to do it. Now, the itemization is the alternative to it. So let's say you do have a lot of different expenses that you need to account for. You do have a business that you've had to buy goods for, or buy supplies for, or you have other expenses and mileage for, all these different things. So that may be a good reason for you to input that information. And sometimes in the tax software, you can put all that information in, and then it will sort of determine which is the better way to go, because your expenses could be more than the standard deduction is. And if that's the case, then you want to go with the one that has the biggest impact on reducing your tax burden. So if the standard deduction is less than what the itemization is, then we go with the itemization, because that's more money that's taken off your income, more money, excuse me, let me phrase it better. That reduces your taxable income more than the standard deduction would. So again, standard deduction or itemization, you have the opportunity to choose which one. And again, sometimes it's you put the information into the tax into the tax software, and then you kind of get a good gauge. And they may recommend, it's recommended you take a standard deduction because your items aren't doesn't either equal to or more than, or your itemized items are not just equal to, but they are more than standard deduction, and so it would be better for you to take that. So itemize, so Schedule A for your expenses, and I'm going to run through this somewhat quickly. So Schedule A, so the health expenses, charitable giving, business expenses, all these different options. And actually, did I print that out? I printed Schedule B, or excuse me, Schedule C, but I did not print the Schedule A to kind of run through what those other options would be. But what I plan to do is put the checklist in the description below as well, because I went to the H&R block, and I'm jumping ahead a little bit, but went to H&R block, and there's a couple of different questions that you can answer, and it will provide a kind of a general checklist for you to look through. And we'll go through that here in a second. But I was also looking at Schedule A a couple of days ago. I didn't print it out, but Schedule A, so specific expenses that you can input in that will help you figure out if itemization or standard deduction is the better way to go. So health expenses, deductible if over 7.5 of your AGI. So medical bills, premiums, long-term care, those kinds of things. So you'll want to have your insurance records, any sort of invoices, those insurance statements, all of those pieces of information. So if you had major surgery or long-term treatments or any of those expenses, make sure that you have those organized, and really kind of, I would say, chronologically as well, just to make sure you're not missing anything, that any sort of, you may have had surgery in May, but the aftercare was really not done until October, November. So we want to make sure from May to October and November, when we're trying to accrue some major expenses for that particular surgery and that event, that I'm not missing anything that happened in July or something that happened in August. And so we're just keeping track of everything. And then charitable giving, if it's enough to kick you over, again, that standard deduction piece. So up to 60% of AGI, so adjusted gross income for qualified charities. And then you can, if you have, my note here is stress appraisals for large non-cash items. So if you didn't just give $100 or something, but you gave a painting, or you gave jewelry, or you gave some item that a value needed to be assessed on, make sure that you be, if it's enough and significant enough of a value, like 5 figures or 4 figures or more, an appraisal, it's not a bad idea that you are paying a professional to really accurately assess what the value of this item is, so that when you give it to whatever the organization is for an in-kind, for a donation of X, right? Because they'll probably sell it, or auction off or something, so at least have a base value of what the item is to assess what money that they made off of it, right? Then you want to make sure that you have that appraisal and that documentation yourself of saying this particular item was worth $7,500, and I'm giving it to X foundation or X organization, and this is my non-cash donation. So I have that piece of documentation as well. So moving on from that, so then business expenses. So if you're self-employed, Schedule C, which is the one that I actually did print out. So if you're looking at the video part of this podcast, Schedule C, which has how much money that you made, so the income, so gross receipts, returns and allowances, cost of goods sold, the gross profit, and then any other income that you need to assess and add in what the gross income is, and then expenses. And it breaks it down into categories that are really good, lines 8 through 27. I won't read all of them to you, but to get a sense of maybe other pieces of information that you need to pull together, especially if you're on the business side of it. So advertising costs, any sort of car and truck expenses, vehicles, machinery or equipment, repairs and maintenance, supplies, travel, travel and meals, deductible meals, utilities, wages, interest, insurance, employee benefit programs, depreciation, and Section 179 expense deduction, mortgage that you pay to banks for the property that you own, legal and professional services. So these are the kinds of things, among others. Again, it was lines 8 through 27, so almost 20 lines worth of information. So lots of categories that you can pull from your pull from your accounting software as you're getting ready for your taxes. There should be a tax location, or it's not a tax location, but a tax section of what I'm trying to say of your account in that accounting software that either you or your accountant, your tax professional, has access to just start preparing your actual tax documentation for that. It should be categorized, should be organized in a way that if you put the information put the information, input the information correctly into the software, that you so you have clean books, clean chart of accounts, clean amounts, that you regularly uploaded receipts to your account, whether that's in your bank or in the actual software, especially if you can pull between the two and one source can pull from the other source, meaning your software can pull from your bank account information. So you have documentation and receipts that go along with those expenses with whatever appropriate notation for it, right? So clean information that goes in should really expedite and make the process that much easier to prepare your tax return or tax statement and return from a business perspective. So income expenses and your total expenses, that you kind of work through the math for that. And then cost of goods sold. So especially if you have a product-based business, so you're a contractor, a construction contractor, or you do painting or lawn care service or window washer or jewelry maker, whatever, there's a tangible object, a tangible product at the end of what it is. But there are materials that you use to make that. So the beading or the paints or the brushes that you are needing, not just to have for inventory. There's a difference. This is not just I just have a stock of 75 brushes that I'll pull from occasionally, but I have a stock of brushes that I use, and now I'm pulling that particular brush and I'm applying it to this actual painting project because this kind of brush is the brush I need to use because I'm painting a giant wall versus a small discrete area which requires a different kind of brush. Now, I literally just made that up, and if that's incorrect, you as a painter, you know what you do, but my purpose and my point is that it's not just I bought 75 brushes, it's I bought 75 brushes, but now I'm applying the cost of this one brush into this project, or this set of beads, package of beads that I bought into this finished product. And that is an actual cost of the good that I sold. So when I assess, a $15 price tag on this piece of jewelry, but of all the beads that I used $3 worth of the $25 that I bought. I'm taking that $3 and I'm assessing it. That is an actual cost of goods sold. So it gets super, super granular and very, very specific to it. So it's not just I'm buying inventory. It's really what materials, what manpower went into the actual doing of this job. So it's not just overhead like my accountant. It really is. Sometimes it could be wage expenses. It could be actual materials, those kinds of things. So you have inventory at the beginning, purchases less cost of items, cost of labor, materials, supplies, other costs, kind of getting the idea here. And then you can total that out, and then any information on your vehicles. This is where mileage would come in. So when did you put your vehicle into service? The month, the year. So if you bought your car in March the 13th of 2025, and that's a business vehicle, or it's a personal vehicle that you will use for business purposes from time to time, like networking events or travel or what have you, then you can keep track of the mileage that's specific to that particular trip and that particular networking. So business, commuting, and then other. And then was your vehicle available for personal use during off-duty hours? Most of the time the answer is yes, especially if it's a personal vehicle, right? They're going to the grocery store. That would be off hours. Or you're taking your spouse or significant other to the movies, or you're picking up your kids from soccer practice. Those aren't business expenses. Those aren't business activities, but your car is being used in off-duty hours. As well. Or did somebody else in your household, did you or your spouse have another vehicle available for personal use? So just keeping in mind that that's information that's on Schedule C, especially if you're a business owner. So starting to gather the appropriate documentation for that. Hopefully that was helpful. I know hopefully I didn't go through that too quickly, but sometimes I just kind of get excited. So I'm working on it. And then run the numbers both ways so that you can see itemization or standard deduction. Now, let me stress this in closing here. I'm not a tax professional. I do not have a CPA, or excuse me, I did not pass a CPA exam, which means I'm not a certified public accountant. but I do have information and I do have a little bit of knowledge about this, but I'm not a tax professional. So definitely procure the services of a professional to make sure that you have the things that you need and that you have a structure for this, that we as business owners didn't necessarily go into business to do the taxes unless you're an actual tax professional, right? We went into business to do the marketing. We would, because we provide marketing and social media services to individuals or small business owners, whatever. Or we went into business to put together beautiful light fixtures because we enjoy interior design, but we want to make those fixtures, right? That's what we went into business to do. We did not go into business to prepare for taxes. So how do we get a structure together from documentation, input into whatever system and software that we need, tracking that appropriately for business and for personal, and then getting that information out and making it a repeatable process that you can do every single time. How do we make that effective and efficient? So this is what I'm here to help you with and kind of remind you of some things. Don't forget to do this, don't forget to do that. So while not a tax professional, I definitely can be kind of a bug in your ear to keep you up to date and to keep you aware of things you need to prepare for when it comes to tax season. So I just wanted to get you organized. That was my goal, and reduce the stress of actually preparing for taxes. So that is actually all that I have for today. It's a great place for me to end this. And again, this is the last podcast that we have of 2025. There'll be more of these to come in 2026, whether that's individually me or me with some of my friends and fellow business owners to come and provide you with more detailed information about a variety of topics from a personal finance perspective or for business as well. So be on the lookout for that. If you would like to be included in our More for Life newsletter, please just shoot me an email at letstalk@StudioMFinancial.net. I will drop that information also in the comments. I will also put, I think I mentioned, a checklist that's generated by H&R Block. One is for service business with no cost of goods sold, and the other is with a products-based business with costs, so you can kind of see what the checklist is that actually will match what these schedules, that Schedule C will be. So you start pulling those pieces of information so that you're ready for tax season. I'll also drop those PDFs in the comment section as well. But that's it for me. Thank you so much, everybody, for even taking the time to listen to the things that I have to say. My goal as your financial coach, I feel like we live where personal finances and business kind of come together, which is a really fun place to be, of how your personal finances impact your business, and then how your business resources and revenues and income then feed back into your personal finances as well. So it's a lovely kind of circle, place that we like to live here at StudioM Financial, but always a financial coach first and foremost. So again, thank you so very much for taking the time to listen to us. Hope it was helpful. Any sort of comments that you have or questions that you may have, please feel free to put them in the comments or send us an email. Hit us up on social media. All that information will be included as well in the comments, because we want to interact with you. I don't want to just be my voice going out into the ether, but I certainly want to start conversations with you all. And let me know what topics that you want to talk about as well. If there's different business concepts, proofing your concept, or scaling, or advertising, or different things that we can start discussing and maybe coming up with some strategies and just kind of workshopping some things as well, and what works, what doesn't work, and how you figure out the two. Let's talk about that as well. Again, I don't want it to be just my voice going out into the atmosphere. I definitely want to be engaging and have conversation with you all. You have questions. I may not have all the answers, but we can certainly come to an understanding and find some answers between the two of us. So that's it for me. I'm Katrena, again, from StudioM Financial, and I'm a financial coach to small business owners. So if there's any way that I can help you, please let me know. And again, until we meet, keep working on the change.
We at StudioM Financial appreciate you for taking time out of your day to listen to us. If you have any comments or questions related to today's content, please feel free to send those our way. The email address is letstalk@studiomfinancial.net, or you can connect with us on social media. If you would like to be notified of future podcasts, you can subscribe to our YouTube channel, StudioM Financial. As always, until we meet, keep working on the change.